Hey, welcome back to Father and Son Investing. We talk a lot on this channel about U.S. Treasuries, talking about Treasury bills, notes, and bonds. What we haven't talked about is what type of accounts really to keep your U.S. Treasuries in. You know, when it comes to investing, just like in real estate, location can oftentimes be one of the biggest factors in your success. What am I talking about when I talk about location when it comes to investing? I'm not talking about allocation, which is different. That talks about what your makeup of your investments will be. 60-40 has been a very common thing, 60% equities, 40% bonds. I'm not talking about that. I'm talking about asset location. We're going to talk about what types of accounts might be the best for you to keep your U.S. Treasuries in. So let's get started. When we speak about types of investing accounts, there are three general categories that we can put them in. The first would be the taxable brokerage account. You might have that at Fidelity, Charles Schwab, or Vanguard, for instance. The second type would be tax-deferred accounts, meaning you're not paying the taxes on the money that you're putting in there, but you will pay taxes upon withdrawal. Those would be your traditional IRAs or your employer's 401k as examples. You could also throw in there simple and SEP IRAs if you are self-employed. The third type would be a Roth IRA in which your earnings grow tax-free. Now you have to pay the taxes on that money before you put it into your Roth IRA account. But everything that account earns after you put that money in is tax-free. There are also other advantages to that account that we won't go into. Having named these three different types of accounts then, which account type might be best for your U.S. Treasuries? In order to discuss which of these three types of accounts you might want to hold your U.S. Treasuries in, we need to talk about tax efficiency. There are some types of assets that you can hold that are very tax friendly. For instance, municipal bonds. They're not taxed at the federal level, and if they are within the state in which you live, there's a very good chance that they're not going to be taxed by your state either. There are some types of investments, though, which are not very tax efficient. For instance, real estate investment trust, otherwise known as REITs. Those may generate a lot of dividends or returns, and as they do that, if you're holding them in a taxable account, you're going to get taxed on those returns at whatever your tax rate is. Now, when it comes to U.S. Treasuries, we're speaking about Treasury notes and bonds. Those are really kind of in the middle when it comes to efficiency. Those are, of course, taxed by the federal government at whatever your tax rate is, but they are exempt from state and local taxes, so there is a little bit of some tax efficiency in there. Nevertheless, are there some investment accounts that you could hold your U.S. Treasuries in that might help you to pay fewer taxes overall? The answer to that is yes. Now, the answer yes is not quite such a simple yes, because some of this is going to depend upon how soon you might need the income that your U.S. Treasuries are producing. But let's talk first about the 401k and IRA bucket, because that traditionally is going to be the most accepted place for your U.S. Treasuries. Now, why is that? First, you need to realize that when you withdraw money from your 401k or your IRA, it is treated as income regardless of the source. So if that income came from bonds or if that income came from stocks, it doesn't matter. It's all going to get taxed at the same rate. So since your U.S. bonds get taxed at whatever your tax rate is when you take that money out of your IRA, it makes sense to just defer the taxes on that and let that grow, realizing that your tax rate in retirement may be less than your current tax rate. If that's the case for you, then this can be a great place to keep your U.S. Treasuries. Now, there may be some of you who are using your U.S. Treasuries for current income, meaning to pay monthly expenses now. If that's the case and you're not retirement age, then you may need to be holding your U.S. Treasuries in a taxable account, realizing that you're going to be taxed at whatever the full rate is that you are currently paying. And also realize that holding your bonds in your taxable brokerage account may have some opportunity costs here, meaning that that money that you're holding in bonds in there could have otherwise gone towards equities. There is some tax efficiency in taxable brokerage accounts when it comes to equities, thanks to the way that capital gains are taxed on equities should you hold them for longer than a year. And if those equities are holding dividends and you qualify, meaning they're qualified dividends, those also can be taxed at a lower rate. Now let's discuss the Roth IRA here as the last possible account or bucket that you could be putting your U.S. Treasuries in. You would be paying the taxes ahead on the money that you use to purchase your Treasuries in that account. But after that, any growth in that account is tax-free. Is this a good place then for U.S. Treasuries? I would say possibly. What do I mean by that? There may be better alternatives to be holding in your Roth account. For instance, I mentioned real estate investment trusts. But if you have room in your Roth account for some U.S. Treasuries, well, by all means, go ahead and purchase them in there, realizing that you're not going to be paying federal taxes on those ever. Now, when it comes to U.S. Treasuries, there is certainly one other type of account that you might be holding your U.S. Treasuries in, and that is a treasury.gov account. If that's the case, how does that fit into any of these buckets? Really, that's going to be looking more like the taxable brokerage account, meaning that you're going to be susceptible to the full weight of those taxes and not being able to defer those until retirement if you're holding them in a treasury.gov account. Now, in future videos, we're going to be discussing asset location more because I want to go into which types of investments might be best in a taxable brokerage account, which other types of investments might be best in a Roth IRA account, and which types of investments might be best in your IRA or 401k. If this information was helpful for you, please give us a thumbs up and share it with someone else. And until next time, enjoy your investing.